The accounting entries. The accounting entries are the records that are entered into the ledgers to document financial transactions. The types of accounts are assets, liabilities, revenues, expenses, and equity. If assets increase, they are debited, and if they decrease, they are credited. If liabilities increase, they are credited, and if they decrease, they are debited. Revenues have a credit nature. Expenses have a debit nature. Equity has a credit nature. The accounting equation must balance. Assets equals liabilities plus equity. Here are some examples of accounting entries with an explanation of the nature of each entry. Entry for sale of a product. A company sells a product for $1,000 in cash. Entry: debit. Cash $1,000. Credit: revenues $1,000. Explanation: cash, an asset, increases, and revenues, equity, increase. Entry for purchase of assets. A company purchases a machine for $5,000 on credit. Entry: debit, machinery and equipment, $5,000. Credit: accounts, payable $5,000. Explanation: assets, machinery, increase, and liabilities, accounts payable, increase. Entry for salary payment. A company pays a salary to an employee of $2,000. Entry: debit, salary expense, $2,000. Credit: cash, $2,000. Explanation: expenses increase, reducing equity, and cash, an asset, decreases. Entry for receiving payment from a customer. A customer pays $300 on their account. Entry: debit, cash $300. Credit: accounts receivable $300. Explanation: cash, an asset, increases, and accounts receivable, an asset, decrease. Entry for purchase of raw materials. A company purchases raw materials for $1,500 in cash. Entry: debit. Inventory, $1,500. Credit: cash, $1,500. Explanation: inventory, an asset, increases, and cash, an asset, decreases. Entry for recording accrued revenues. A company provides a service and expects to receive $800. Entry: debit. Accounts receivable $800. Credit: revenues $800. Explanation: accounts receivable, an asset, increases, and revenues, equity, increase. Thank you for watching. See you in the next lesson.